Hey, my name is Connor, and welcome to Crypto Empire, where we dominate the crypto market. In this video, I'll be going over supply and demand trading in the cryptocurrency market. Around 1 year ago, I first covered supply and demand trading here on the channel, and from that video, I've gotten so many messages from a lot of people saying how much it has helped them out. So I figured I would remake the video, make a little new and improved version of it for your benefit. So whether this is your first time hearing about supply and demand trading or you're just here for a refresher, this is the video for you. So be sure to clear distractions, get a pen and paper ready, and stick with me until the very end. Without further ado, let's get right into it and let the gains be with you. So before we hop into the charts and start going over examples of supply and demand trading in the cryptocurrency market, it is imperative that you understand the candlestick formations that make up supply and demand zones. There are 4 distinct candlestick formations that we do look for. 2 of them are continuation candlestick formations, and the other 2 are reversal candlestick formations. So without further ado, let's go over very quickly what these do look like so that you do have it in your mind, because a lot of trading is pattern recognition. Now, before we do go over these candlestick chart patterns, I do ask that you smash that like button down below. And if you're new to Crypto Empire and you're not already subscribed, go ahead right now and smash that subscribe button and turn on all bell notifications so that you don't miss any future videos. Now, looking at these candlestick chart patterns, we will start with demand zones. And when it comes to demand zones, we do have the drop base rally as a reversal chart pattern and the rally base rally as a continuation chart pattern. As you can see here on the left side of the screen, this is what a drop base rally demand zone does look like. We have a big drop into the zone, and then we have a series of basing candles. There can be one basing candle and there can be many basing candles. All right, we'll be showing you examples of that in the charts with actual cryptocurrencies. Now, when it comes to the basing candles, it is very important to note, to distinguish a basing candle, less than 50% of the candle must be made up of the body. Otherwise, the candle would not be classified as a basing candle. Very basic tip right there, but also very important. That is how you distinguish what candle is a basing candle and what isn't. All right, so here you can see in the drop base rally, as a reversal demand zone, we have the big drop in, a bunch of red candles, and we have these 3 basing candles, all right? And then we have the rally out. So you would isolate these basing candles. I'll show you in the examples in the charts. You can either choose to isolate it by placing the start of the demand zone where the candle bodies open and close, and then I usually always mark it down to the lowest wick for a demand zone. Sometimes I will mark it from wick to wick, but it is on a case-by-case basis. Now, for the rally base rally zone, very simple. We have a rally in, then we have basing candles, right? And then we have a strong rally out. We look for that strong rally out. We look for the basing candles. What do? We isolate the basing candles. We mark them. All right, that is how we define our demand zone. And then we would wait for that demand zone to get retested for a trade entry. All right, so these are the 2 demand zones. Now let's go over the 2 supply zones. All right, now looking at the supply zones, again, we have 1 continuation pattern and 1 reversal pattern for supply zones. For the reversal pattern, we have the rally base drop supply zone, as you can see here on the left side of my screen. How do we define what this is? Well, we look for the strong rally in price, and then we look for the basing candles. Again, we isolate that base after we see the strong drop in price. It's very important that price has a strong move away from the zone. If it's a lackluster move away, then it won't be as strong of a supply or demand zone. So make sure you write that one down. A strong move away is definitely a good thing to look for when you are trading supply and demand zones. And again, you isolate it by either taking it from the lowest wick to the highest wick, or you can see in this example here, it was taken from the candle body open and closes to the highest wick of the supply zone. All right, now we have the drop base drop supply zone. This is a continuation pattern. All right, so we have the strong drop in, and then we have basing, right? Price consolidates for a little bit. And then we have the next drop, a strong move away in price. In theory, there are leftover orders here that were never filled, and price would come back and retest the supply zone to fill those orders before continuing in the direction of the trend. All right, so these are what the 4 candlestick patterns do look like they are very simple, and once you train your eye, it will be very easy to identify them in the charts. With that being said, it's time to hop into the charts and go over some real examples that have played out so that you can really see how powerful and effective this strategy really is. So to start things off, we are going to be looking at the Bitcoin chart on the daily time frame. First thing I'm going to do is show you an example of a demand zone that had played out successfully in the past, more recently in March of 2022. I'm going to be looking right down here where my white arrow is on the charts. So to actually illustrate this, you can see I already have the zone mapped out with this green zone here. However, from this time frame, you don't really see the drop base rally. All you see is a big red candle and a big green candle. So when you see this and you see these wicks, that is when you should lower the time frame, all right? So you need to be nimble. You need to be able to switch time frames. I usually always start on the higher time frames, whether it's a weekly chart, a 3-day chart, or a daily chart. Then I'll work my way down. All right, so let's go hop on over to a 4-hour time frame, and let's see if we can actually isolate the pattern that we do look for. And lo and behold, we do have a beautiful drop, base, rally, right? And then we have another base and candle before a huge explosion in price. Remember what I said before when I was going over the patterns. When you see a big move away from the zone, that is a great indicator that it's a stronger, more reliable zone. All right, so here this is a textbook demand zone, drop, base, rally. You can see how I isolated the zone. I took my first line and I placed it right where this candle body opened, all right? Where the highest base and candle body opened, and I took it to the lowest wick of the zone. Like I said, it's subjective. Sometimes people will choose to take it from wick to wick, so they'll mark their zone from the highest wick of the demand zone to the lowest wick. And when we do have the pattern where it's a drop, base, rally, base, as you can see this base and candle right here, sometimes I will also include that, and I'll just mark my zone from the candle body open of that last base and candle to the lowest wick. It is very subjective. I do draw my zones on a case-by-case basis, so there is 1,000 ways to skin the cat, as the saying does go. All right, so be nimble with it, and the best way you're going to learn is through experience. Now, how did the zone end up playing out? Well, as you can see, it ended up working perfectly. It was the perfect trade entry. You would have called in the bottom here at Bitcoin at $37,100, $37,200 if you would have isolated this zone and placed your limit orders right in here. If you want to learn how to place your orders when you trade, I made a full video about how to do that. I'll leave a card right here for you to watch that after this video. Now, as you can see, when price did come back into the zone, it kind of took a little bit, right? We have a few 4-hour candles over here where it was kind of basing around, consolidating, didn't know which direction it wanted to go. However, price went ahead and it exploded to the upside. Now again, let's identify what happened. Why did price decide to change direction right here at $42,500? Just for your reference, I'm looking right here, right? And you can see I marked this as a supply zone. But why did price decide to change directions right here? Well, what do? We always look to the left, all right? When you have the ability to look to the left and you have data there on the screen, if you don't use that data, you're doing yourself a major disservice as a trader, especially a supply and demand trader, because really we're identifying the key levels in the chart to trade off of. It's very simple, all right? And if we look to the left, what do we see? Well, what did we just go over for supply zones? Remember the continuation pattern, the drop, base, drop. What do we have here? We have a big drop, 2 basing candles, and then a continued drop lower, a strong move away as well. So we can go ahead and isolate this zone. I'll do that by taking where the candle body's open over here, and I will take it to the highest wick. And lo and behold, what do we have? All right, if I get rid of this other one, what do we have? Price came right into the supply zone, as you can see right here, and then it had a strong move out, strong move down. All right, so I just want to train your eye right now and make you realize that this does actually work, and it's not too complicated, but it does take a trained eye, and it will take practice to determine which zones are actually worth trading, because I'm sure a lot of people would have went ahead and marked this zone right here, because we have a drop, base, drop as well. So how do you know that the upper zone is actually the main one to take the trade off of? Well, you can look at these wicks over here, and you can say that This second zone was simply testing the first real main zone, all right? So when you see something like this and it's clustered together, remember what I just said. A lot of traders, myself included, I will like to market from these candle bodies as well. So I would include this as one big zone. This way I don't take my entry in this supply zone for a short, and for your stop loss, you'll have to put it just above the zone, right? So if you put your stop loss there, you would have taken the zone like this. Well, you would have gotten stopped out of the trade, but you would have been right as well if you took this as a scalp, right, as a day trade. So always look to the left and see the whole picture, because every candle does actually tell a story. You need to learn how to read all the candlesticks, and you need to put them together, put all the pieces of the puzzle together, and see what they are telling you, because they do give you all the information that you do need. Learning how to read price action is a skill that you will take with you for the rest of your life. It is extremely useful as the cryptocurrency market, all markets are ever providing once you do learn how to successfully and profitably trade in them. All right, so I guarantee you, if you do put in the time to work, to study, and to get good at trading, it will pay off in the end. I can tell you that from personal experience. Okay, now moving on, let's go over some more examples of supply and demand zones, ones that have successfully worked out in the past so that you can continue to train your eye and be able to identify these zones off of the whim. All right, because that's really what it's going to take. Now, over here, we can go ahead and we can see at current prices what is actually going on here. All right, well, you can see we do have this huge green candle. All right, we're looking on the 1 or the 4 hour chart right now. So we have this huge green candle. This is a little bit of a pro tip for you. When you see a nice big candle like this and you see a wick at the bottom of it, that is a sign that you should lower the time frame and you should really investigate what is going on here, because chances are there is a pattern that we have went over. In this case, it would be a demand zone. So let's go ahead and let's lower the time frame to a 1 hour, and let's see what the candles are telling us here. So lo and behold, what do we have? We do have what I would like to classify as a demand zone. It's not picture perfect. They're not always going to be picture perfect, the candles, but these are indeed basing candles over here. With this zone, it is definitely not picture perfect, but it is for sure worth marking on the chart. And also, you can see I do have a yellow dotted line placed right at this level as well. That is from looking to the left and determining that this is a key level on the price chart. You're going to notice supply and demand zones will form at key levels of support and resistance on the chart as well. Does that mean that supply and demand zones are the same exact thing as support and resistance levels? No, it does not. They are different. However, they have a lot of similarities. I'm not going to be getting into the real nitty-gritty in this specific video about that, but just know when you see a key level on the chart, a key level of support or a key level of resistance, there's a good chance that price will face resistance or support there and end up basing. When it ends up basing, what does it form? It forms a supply or demand zone, right? So they really do go hand in hand. That's why it's imperative that you really kind of brush up on your overall trading knowledge. You have to put a lot of pieces of the puzzle together, a lot of moving parts. But like I said, once you learn it, you have that skill with you for the rest of your life. And trading is an extremely lucrative skill to have as well, especially compared to what is taught in most schools, right? In school, they're not going to teach you how to actually make money. They're going to teach you how to be dependent on an employer. Here we're teaching you how to be dependent and reliant on yourself so that you can always look after yourself. And that is the most important key to life, in my opinion, having the ability to be self-reliant. Now, anyway, let's get back into supply and demand trading. How would you mark the zone? Well, I would mark this from the candle body opens over here down to the lowest wick, like so. All right, now we can go ahead and see how it did play out in more recent times. Go back to the 4 hour, see how we drew it, right? We drew it from that candle body wick. Picture's going to be perfect on the 4 hour compared to the 1 hour, down to the lowest wick. And you can see that price has actually went ahead and it has bounced quite nicely from the zone. Now, there's a lot of things going to be thrown at you here. It's very important that you're able to identify the overall market trend. Because if you look too short a supply zone in an uptrend, there's a pretty decent chance that the supply zone is going to get blown through after maybe a little pullback to the downside. And with that being said, in a downtrend, if you look to long demand zones, there's a pretty decent chance that after price does initially come, test the demand zone, bounce, that it will continue in the direction of the trend. Now, I'm not saying we're in an overall downtrend right now on Bitcoin. I'm just saying an overall broad example right now. You need to be able to identify the market trend that comes before looking at supply and demand zones. Because if you look to short in an uptrend, you're probably going to get blown out. And if you look to long in a downtrend, you're probably going to get blown out, right? I see a lot of beginner traders, especially my students, making this mistake of not finding the overall market trend. It could be a short-term downtrend, and you still look to take a long, and you still get stopped out of the trade. The zone gets completely invalidated because it's in a downtrend and you're looking for longs. So we're not going to be spending a lot of time looking at identifying the trend in this video, but write that one down and watch my other videos on how to identify the trend, because that is super important, especially when it does come to supply and demand trading. And just for reference, what I was referring to before in terms of key levels on the chart, whether that's support and resistance and zones do form there, we can see where this yellow line is put at $43,000, how it is used many times as an area of support and resistance, right? You can see over here it's used as support, over here support as well, over here some resistance. So $43,000, a pretty key level to have marked on Bitcoin at the current moment in time. Now let's continue on with some more examples in regards to supply and demand trading. Okay, we are now looking at VeChain on the 1 hour chart. And we do have a perfect example of a demand zone playing out here. What do we see here? Well, I see an explosive rally up in price with a little bit of a consolidation right here in the middle. All right. And like I said, remember, I have this yellow dotted line. I've had this marked on my chart for months now for VeChain. And what happens at these key levels at the charts? Price faces either support or resistance. In this case, it faced resistance. And what did it do? It based. Okay, so what do? When we see that, we go ahead and we isolate the base. Again, we can either take it from wick to wick or body to wick. If we took it from wick to wick, we would mark it from the highest wick down to the lowest wick. And you can see that after price went ahead and exploded, it came and it retested this wick over here, right? It retested this wick and then it had another strong move out. That's a beautiful little scalp day trade right there. See the percentage gain on that little move. That's about 25%, and this is a 4 hour chart, so that's less than a day, a 25% move. All right, that is a very nice day trade right there. So you can use supply and demand for all time frames, all trading strategies, whether you're scalping, swing trading, or long-term investing. It works on all time frames. With that being said, you can also choose to isolate the zone from body to wick. In this case, you would have taken it from this candle body down to the lowest wick here, and you would have missed this trade over here, right? You would have missed this retest of this wick because you didn't have it marked from wick to wick, but that's fine. You need to be patient as a trader. Patience is so important, right? Trend is super important, and then when it comes to your emotions, patience is one of the keys to trading, right? You need to let the market play out, do its thing. You set up your trade, you manage your risk, and then you let the market do what it needs to do. As long as you can manage your risk, you can be wrong quite a bit and still be a successful, profitable trader, right? You don't even need a 50% win percentage to be profitable as long as you are good at risk management. I go over all that in my other videos as well as in some of my programs, my courses. Nonetheless, let's continue on with the video. So we isolated this candle here. We have a rally, base, 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 and then an explosive move out. We isolate it from body to wick, and then what happened here in this most recent crash? Right, price had a nice strong move down right into the zone. When we see a nice strong move into a zone, that is good, right? Because remember how most people think when it comes to trading, especially retail. When they see these red candles, what happens? They get scared. They start to panic. They want to sell when prices are low, but what do the professionals do? The professionals see that price is down. What does that mean? It means that things are trading at a discount. All a demand zone is marking where the discounts are in the charts, right? Think of it like you're going to Costco and you're seeing something on sale for a great deal. That's the wholesale price, all right? We look for the wholesale price to buy. Now here on VeChain on the 4 hour, what happened? Price came right into the zone. Now it's reacting quite nicely from that zone, all right? So a little textbook example here of a rally-based rally demand zone here on VeChain. Sorry, this is the 4 hour chart. I think I was saying 1 hour before. Anyway, textbook example right here. Trade is playing out. There are some big resistance levels now, right? We do have this resistance over here, right? I'm looking where these wicks are, and lo and behold, what is there? There's a drop-based drop. You can definitely isolate this as a supply zone. We'll see what does happen here, right? Price is pretty choppy at the moment. There's no clear direction, clear market trend. However, we can look on the daily and debate that, we have made an uptrend because we have went ahead. Actually, this looks beautiful on VeChain, right? What happened here? We had this local high. Price went and it broke out. Now it went and retested this local high. So you can definitely call this an uptrend, and you would expect the next wave, you want to make a higher high past 8.5 cents here in VeChain. This does look very good. All right. So let's continue on with the video and take a look at some more examples. All right, now let's take a look at Mana Decentraland on the daily chart. So this is a bit of a choppy chart right here, right? Price is kind of trading within this range on the daily. Nonetheless, it's a beautiful example of using supply and demand to trade the extremes of a range. So let's go ahead and go over this. And if you can see what I'm seeing, you should be able to spot it right away. So first place I'm going to look is up here in the top of my screen at the supply zone that has formed. All right. What do we have here? We have an explosive green candle, this one just here. Then we have a nice base, nice little doji up here, represents indecision. Then we have a strong move away, strong move down. So we would go ahead and we would mark that. Again, you can mark it from wick to wick or body to wick. Whatever you do, choose. That is a personal preference. That is subjective, right? A lot of trading is all subjective. It is not objective. There's 1,000 ways to skin the cat. Every trader will look at the chart differently and come up with something different in their head, which is why you cannot really rely on anybody but yourself, which is why you need to put in the time and get good at this. Right? It's not going to happen overnight, but it will actually happen if you stay consistent and you really do actually want to succeed and learn. Anyway, how will we isolate this zone? We would isolate it from, in this case, I'm going to take it body, right where the candle body closes here. In this case, it's a red candle. I'll take it where it closes, and I will take it to the highest wick. Okay? Now, what happened here on Mana? Well, price came, and where did it decide to turn around? Where was the highest point of this wick over here? It was right here in the supply zone. Another example, this is a daily chart. That's how a supply zone does actually work. This is a rally-based drop supply zone. Also, at the bottom of the screen, what do we have? Well, we have a bit of a demand zone, don't we? Right? This isn't the cleanest demand zone, but it is still a demand zone. All right, so I would consider this candle, this red candle just here, as the drop in. Then we have a base. Remember, base in candles, the candle body needs to represent less than 50% of the candle. Right, this green candle is kind of questionable, and nonetheless, I'm going to mark it as a base. Right, it's not picture perfect, like I said. So I will isolate these as my drop base rally demand zone. All right, so we can go ahead and we can mark that on the chart like so. So I'll take it from the candle body open over here down to the lowest wick, and lo and behold, what happened over here? Well, price did have a very strong move down. Right? This would have been a nice short. Remember, this video is more of a general overview. If you want the real specific details about how to really set up the trades from supply and demand trading, I go over all that in the trading course, right? But for this video, we're just going to stick to basically a general overview of everything because there's a lot to talk about. And this video, I don't want to have it go on for hours. So anyway, where you look to take your target, your profit target on a trade would be the closest demand zone. Right over here, we look to take a short. So for the short trade, the target would be the demand zone to closest to current price, and that's down here, right? So if you would have taken the short up here from your sniper entry down to the zone, that's about 18% right there. So that's a great little trade right there over the course of a few days, less than a week. All right. Nonetheless, what happened? Price had a strong move into the zone, reacting nicely so far. And that is another textbook example of a demand zone working out. Let's go ahead and move on to some more examples. Okay, we are now looking at Zilliqa on the daily time frame. Now, before I isolate the demand zone here, it's pretty clear. You should be able to see it. You'll notice I do have my yellow dotted lines going across the screen. I have these lines marked out at these levels for a very specific reason. They are important when it comes to price action. We can look at a 3-day chart and we can see why it is important. Right? It's very simple, especially when you zoom out and look at the bigger levels. You can see price did face resistance just about at that level. Price used it as support over here. Over here used as support, resistance, support, etc., etc., etc. All right, when we see that in the charts, we do look to market, so we have it as a reference point. We look to use all this data to make our trading decisions. We never trade blindly, which is what most retail traders do. They see price go up and they jump in long after it's already pumped. That's not what we're doing here. We're setting up things before they get to the price levels. We take our entries and then we let the trade do its thing. Anyway, we're looking at Zilliqa now on the daily chart. What do we have? Huge rally, base, 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 huge rally out. In this case, right, you would go ahead and mark this from wick to wick. As you can see right here, if I take this from the highest wick down to the lowest wick, this is a bit of a big zone here, right? If we look at this, looking at a 32% percentage zone here, right? 47% to the upside. So a bit of a wide zone, nonetheless, it's still a rally, base, 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 rally out. And what's happening here, all right? I just want to get your eyes trained to see how price action does work. You're noticing how it does react from these wicks. You're going to see this play out over and over again when you're a price action trader, and this is what you look for, right? Price came, hit 22.8 cents, 23 cents. Now it's seeing people take profits, etc. Where does it come down to? It comes right down to this demand zone where these wicks are. Now it is possible we see a bounce here, right? Then price comes and maybe it tests some lower levels in here in the zone. But to me, this is an extremely bullish chart. I think Zilliqa will be continuing to the upside. All right, so definitely have this one marked on your chart. If you do get, a test of these candle bodies over here in the daily, I think most likely it will hold, and then you'll see maybe some consolidation before continuation to the upside here on Zilliqa. So that is another example of a rally-based rally demand zone. And also, let's determine why price decided to turn around right here at 22.8 cents, 23 cents. I've had this green line on my chart. I don't remember when I placed it. It was months and months and months ago here on Zilliqa. So why did price decide to actually go ahead and stop here? Well, let's take a look. And this is a weekly chart. All right, you can see the all-time high of Zilliqa is right here at 25.6 cents. Okay, let's go back to a daily. So now looking on the daily chart, basically what do we have here? Well, we can definitely classify this as a supply zone. Remember, supply zones are, I don't really go over the definition, but a supply zone is where price is expensive, right? In a supply zone, you always look to sell, right? Whether you're long, you look to take profit, or you look to sell short and then buy back lower in a demand zone to close the short. Supply zones are when price is overheated, it's expensive, and you look to short it, sell it, take your profits if you're long. All right, so an all-time high price level is expensive compared to the rest of the chart. And you can see we don't have the cleanest candle formation here, but nonetheless, we can definitely say that it is here, right? We can either classify this one, we can say that this body makes up more than 50% of the base here with this candle, like so, or we can say that this was the rally, then we have the two bases and a rally out, and then this was a retest of the original zone here. Either way works. The most important thing is that you just are able to determine it and mark it on your chart, right? So for the example, let's say we use this rally, then these two basing candles, we take it from wick to wick, right? And then it obviously came and retested, right? Slightly went higher. So here the market makers went ahead and they triggered some longs that were placed just above that previous all-time high. Then what did they do? They slammed the price to the downside. We had the strong move down. Then we know to indicate that, we know how to mark that as a supply zone, right? When we see that strong move away. And then what happened, if we go ahead and we look to the right, again, price pumped explosively, right? When you see the explosive pump like this, that is not when you want to be a buyer. That's when you want to be a seller, especially when it's in a supply zone. And lo and behold, price went ahead and it turned here on the dime. All right, another perfect example here of a demand and a supply zone on Zilliqa. Let's go ahead and let's go over another example. Okay, we are now looking at Glimmer. This is Moonbeam on the daily. So this was a successful trade that I did actually trade. And I'll go to the 4-hour to show you why I even decided to take the trade in the first place. Over here on the 4-hour chart, we do have a bit of a head and shoulders that did play out. As you can see, I have my zones already mapped out. But what I liked about this trade was this descent over here. And we have this left shoulder where it's high volume. Then we have the head, lower volume, and the left shoulder, but still decently high volume. Then we have the right shoulder over here with the lowest volume out of the three. So that checks off our volume profile as for Head and Shoulders. This video is not how to trade at the Head and Shoulders chart pattern, but I do like that setup a lot. I do trade it consistently and profitably nonetheless. That's why I decided to take the long trade in the first place, right? And then we have this descending trend line, all right? So when I see that, I know that shorts have their stop just above these levels. And then when price decides to break out from the neckline, it likes to liquidate all those stop loss orders, which causes a terminal velocity of increase in price to the upside, which is exactly what we do look for when we're taking a long from an inverse Head and Shoulders. Sorry, I call this a Head and Shoulders. This is classified as an inverse Head and Shoulders chart pattern. Anyway, this is why I set up the trade. You can see I did post this inside of the Crypto Empire Premium Discord group. This was posted back on Monday, February 28th. As you can see, this is a completely unedited post, as are all of my trades in the Discord group. And you can see this was a beautiful Head and Shoulders with our neckline entry. Perfectly placed, right? We had our stop at $2.18. I do want to show you, just so it's crystal clear, that after the entry was triggered, price came all the way back down to this zone, and it did dodge the stop. As you can see over here, the low is 2.1832. So we missed getting stopped out on this trade by 0.0032. So I was never stopped out of the trade, and it was actually a big winner for me and everybody else who decided to take it, obviously, inside of the group. Anyway, let's continue on with the example and how it actually ended up playing out. All right. So looking at this, I decided to take my entry over here at 285. As you can see, price broke out, but where did it stop? Well, we look to the left, and we do have a bit of a base drop. Price did blow through that zone, right? So it did get invalidated, but nonetheless, price did come back down. Went ahead and retested some demand levels down here. Right, we have a nice cluster of demand in here. I do have it marked out from the original left shoulder. Nonetheless, price came, based here, then it decided to move to the upside. And then we had the real breakout that we were looking for to actually go ahead and trade. And why am I showing you this example of an inverse Head and Shoulders trade example when this is a supply and demand zone video? Well, great question. I did use the inverse Head and Shoulders to take my entry, but how did I determine my profit targets, which is super important when you're trading? Right, as you can see over here for my first profit target, what do we have looking to the left? We have a drop, base, drop out, right? And remember, then we have another supply zone that formed. So whenever I see this pattern, I always mark the higher one, or if it's a demand zone, I mark the lower one. That's just me doing this for 5 years plus now, knowing what to do. For you, remember this tip, right? When you see a drop, base, rally, base, drop, mark the higher one, or you can just mark the whole entire thing. Anyway, decided to take my first target right here at the top of the supply zone at the wick at just about $4. As you can see, if we look to the right, that price did end up facing a bit of resistance before blasting off to the upside. Now, where do I place the second target on the trade? Well, we can go ahead and see that it's a pretty key supply zone, pretty obvious one as well, right? We have a rally, base, and a strong move away, right? Rally, basing, strong move out. Where's the top of the zone? It's right here at $5.42. We also look to the left. You see that was used as support and resistance a few times. So that is how I knew to put the target there, right? I see the supply zone. I scope it out like a sniper that I am. And I'd use that as my profit target. What ended up happening here, right? Glimmer broke to the upside. Where did it stop? Exactly at my second target for the trade, as you can see. Target 2 at 540. Where is this line? 540. This is exactly where price turned around right before retracing. All right? So picture perfect example there of using a supply zone as a target for a long. And that's really just how it's done. Bread and butter right there all day. All right, so I just checked the time on the video, and I can see that I've been going for quite a while now, over 30 minutes. And if you're still with me right now, if you're still watching attentively, I do give you credit. You are hungry to learn, and that is absolutely amazing. Now, if you want to continue learning my trading strategies, supply and demand is not the only strategy that I trade, right? I also look for other patterns. Anyway, I go over everything inside of my premium elite trading course, right? This teaches you everything, literally everything that I know about trading. You can find the link to this course in the description down below. I will also leave it in the pinned comment. All right, I will never DM you first. The only way to get access of my trading knowledge is through my official website. So there's a lot of fake profiles of me out there. Just know I will never send you a message first, okay? The only way to get access is through my official website. You can find the link here on my YouTube channel, on my real Instagram account. I only have one Crypto Empire Instagram account, or my Twitter as well. Anyway, this will teach you everything that you do need to know about trading. I highly recommend it. You can see all of the testimonials from my students that have learned a tremendous amount, and they are picking up on everything and absolutely crushing it trading in the cryptocurrency markets. In this video, we covered supply and demand trading. Supply and demand trading is one of my bread and butter trading strategies. It is extremely effective on all time frames. The higher the time frame, the more reliable the technical analysis, no matter what strategy that you are using. Nonetheless, you can use this to day trade scalp, you can use this to swing trade, or you can use this to determine your levels for long-term investing on where you want to enter and exit from the market. I hope that you did enjoy this video. If you did, make sure you let me know by smashing the like button down below. And if you are new to Crypto Empire and you're not already subscribed, go ahead right now and smash that subscribe button down below and turn on all the notifications so that you don't miss any future videos. And my name is Connor from Crypto Empire, and I will see you in the next video.